I'm the third generation of my family to lead the business. Granite Group, we're a plumbing and HVAC distribution wholesaler headquartered in New England. Our headquarters are in Concord, and our distribution center is in Londonderry, New Hampshire, and that delivers every day to every one of our locations. So we're delivering plumbing, HVAC, and so forth to the professional trade through our distribution network of now over 65 branches around New England and upstate New York. We're selling to mechanical contractors, HVAC and plumbing technicians. And then we also have a retail arm with our sink and spout, which is selling to homeowners and designers and architects. So that kind of rolls up to kind of a quick overview of the business. My title is CEO, and I've been with the company for 22 years now. My role is kind of overseeing, certainly working with our executive team to oversee the day-to-day operations, as well as obviously strategy and growth plans to continue to expand the business. So we've been really lucky. We've been on a good run. We've been able to more than double the business over the last 5 years and have a plan put together to continue to expand both organic growth, which is, opening new branches for us, as well as M&A and other new verticals we've gotten into. So that's kind of how we look to grow the business. We're either share of wallet, which is what you should be doing every day as a sales force to try to gain more share of your customer's business. Then we'll look at M&A. We just closed an M&A. We just acquired Premier Supply in April. And then, so we'll continue to do that. But in lieu of, you can't start your year and say, I'll do 3 M&As this year, right? It doesn't happen that way, right? So that's why we launched our organic model, which is where we're opening new branches. We started by opening 2 or 3 a year, then get up to 5 or 6. And now we have an aggressive plan to open 10 over the next 12 to 18 months. Best part about those is the opportunities it opens up for our people. So we're really proud of our culture. And we're building this durable growth engine for our people. And that organic model allows opportunity for people to move on and move up. And we open a new branch that needs a new leader, and that leader then goes and runs their own business, and then they need to be filled back in. So that's that kind of growth engine we have. And then the final piece we have is new verticals. So we started in plumbing and hydronic, got into HVAC, and now we've added well and water, and we've added propane and a couple other divisions. So that's kind of the business and how we've sought to expand it. Historically, my father really built the business through major acquisitions. So he started with 2 branches and acquired a 3-branch wholesaler in New Hampshire, and that kind of moved our center of the universe to New Hampshire from Massachusetts, where I grew up and where we lived. He did it through large M&A. When I come on board and kind of gotten more involved, we still want to do that M&A, but the problem is it's a winnowing channel. There's less and less of it. So because of that, you have to find other ways to grow. And that's where the organic model came out for us. And really the platform was built for us to be able to expand on this organic piece. So I always feel like we look and say, boy, we have a lot and, so much going on right now. And when it slows down or when we're able to catch our breath, all those terms, and that never happens, right? But I kind of believe pretty strongly, we as an organization believe pretty strongly, you're either growing or you're dying. So all of the pain we're feeling now is growing pains, and they're painful, and you got to deal with them, but they're far better pains to have than the feeling of going backwards or sliding back. So keeping the foot down and really trying to take advantage of every opportunity we have is our focus currently. I can tell you it was after 08 and 09, because we were surprised and caught off guard by that. And, for many, many, many of those difficult days, I had the thought of, geez, wouldn't it be amazing if I had known this was coming? What would we have done if we had known, if we had known, if we had known? And then I was at a distributor conference and saw an economist from ITR speak. And here was someone saying, we knew it and we told our clients. And I was like, wow. And then I dug into it and realized the conference was in Hawaii. And I'm listening to this economist speak, and I Googled them and realized their headquarters are about 5 miles from my headquarters, New Hampshire. So I set up a time to meet with Alan. And I tell the story, it's perfectly encapsulates Alan and the ITR and how they fit with us. I said to my father, who was still active in the business at the time, I said, listen, I'm going to go meet with this economist. They have this great ability. They purport this ability to kind of see around the corner, and how valuable would that be for us? And if you knew my father was directly on brand, he said, I don't believe that kind of stuff. Like, people say they can do that. If they do that, why aren't they retired? If they can predict the future, they should just, win in the stock market and be on a beach somewhere. I said, well, listen, I think there's value. I'm going to meet with them. If you'd like to meet, he said, I'll be there. So we sit down with Alan at the Bedford Village Inn, and right away, my father starts in and says, I don't buy all this stuff. If you're that smart, if you can predict the future, you should have already like killed it in the stock market and been retired on the beach already, rich and retired. And Alan, perfectly nonplussed, doesn't flinch. So that's interesting, Kevin. Thank you for your opinion. I would just respond with two facts. One, we don't predict the stock market, nor do we don't say we do, we don't pretend to. And two, you're assuming that I'm not already rich. And it was such a good line. And my father immediately cracked up because it was perfect. And it was like, and that started the relationship. We hired ITR. They've been tremendously helpful to us as an organization. But through the decade plus, we built a really great relationship with Alan. I have lunch with him once a year, and it's always my favorite lunch of the year because it starts here and then goes here, and then we're here, and we're in economics and geopolitics and family and everything in between. So it's just, we built a great personal relationship, but ITR through the years has become a really core piece of how we view our business, and kind of helps us build the lens through which we kind of plan out our business. Yeah, that was really the genesis of it. It's evolved into far more than that, but it was this idea of like, what would we have done had we known? And then ITR offered us the ability to learn. So that was the attraction, but it's been now, a dozen years plus, and it's morphed into really different from that. It's still, what's coming. But through the years, ITR, has gotten to know our company a lot better, and they becoming exponentially every year that goes by, they become more valuable because they know us better. And they know that we're opening new branches and that needs to be factored in. And they know that we saw some sluggishness in Connecticut a few years ago, and would help us to understand why. So it's become a core part of our kind of budgeting process, candidly, to include ITR and say, okay, what are they telling us they're seeing coming forward, and then how can we prepare for it? So it's become, and internally, we view the ITR forecast as kind of baseline. And what I mean by that is that's what the economy is going to give us. If we just come into work every day and do our job, we can expect the economy to grow 1%, 5%, 4%, whatever the numbers are showing them. And then we internally say, okay, that's the baseline. Now let's go beat it, because we're going to open new branches. We're going to, get aggressive in the marketplace. We're going to try to grow our share. So this is what the economy will give us, is what ITR tells us. And then we're going to always try to do a little better than that. I think it's it's really what you're talking about, Tim. It's the confidence that it gets to know this is what we expect to come. So I'll give you just the most recent example. So, we're coming off a super unique time in the macroeconomics perspective, but certainly in our industry, because COVID hit and it was an immediate slowdown, and then it took off, and we had tremendous pull forward, right? And all of that worked itself through our business. Then we were hit with inflation that was very beneficial to our business, but unfortunately was followed by deflation, which has been very difficult, right? So, and now we're still almost not quite yet through the tailwind of COVID. And I mean that in consumer demand, I mean that in supply chain, and mean that in, inflation and deflation. So all of that's almost back to somewhat normal. And when we looked out for this year, ITR was pretty clear, like it's going to be flat. It's going to remain flat, and we're not going to see it tick up until the fourth quarter. And, internally, we okay, that's one data point. Then we look and say, okay, where are we gaining share, market by market, branch by branch. And we come up with something internally in this year's case that was much more aggressive. And I just made the decision to lean back on ITR, really, and not listen to our people. I don't mean that at all, but just kind of say, hey, listen, we're coming off some pretty unique times here. They're being pretty clear about the fact that it's going to be pretty sluggish here, and not until the back half. Let's dial back a bit our own expectations. And then the painful part, to dial back the spend, and dial back the investment, and dial back all that to make a palatable P&L for the year. But sure enough, here we are 6 months into the year, and ITR's prognostication was unfortunately right on, which has been pretty sluggish and kind of flat. And now I fully hope and expect, and I'm waiting for that fourth quarter pickup that they have talked about. So that's a, present day example of when you have a trusted resource like we have in ITR that's giving you data and giving you facts. If you choose not to listen to them because you don't like what they're saying, well, that's on you, right? And you can't just pull out ITR. ITR says we're going to be up 5% this year. Great, we love the economists. They say we're going to be flat. We don't want to listen to them, right? You're really kind of ending the whole purpose of working with them. So that's a real life, real time example of listening and working with ITR and balancing what they're telling us into our own business and coming up with what we felt was the right plan for the year. And it turns out so far it was the right plan. We didn't go out to a big process and interview a lot of other, ITR is very well known in our space. So they're prevalent and well known. And I talked to a couple of people who had used them, but we didn't really shop, so to speak. And that's kind of the way we operate. We felt that they fit for us, and we felt we liked the way they went to market. And we liked the way we liked their business and their focus on how they dealt with their customers. And we felt it was the right place for us. And that's kind of how we deal with relationships like that. We don't put them out to bid and then say, can you tighten this up and all that. That's, there's time and place for that depending on your business and depending on your partner. But in this case, we felt they were the right fit. And then compounding the relationship we had built through the years with Alan and with the team, with Chris and Lauren and others, they've, again, their value compounds annually for us as they know us and know our business. So we really haven't shopped or looked, and ITR has given us no reason to, and we have no interest in it because we feel we have a really great partnership that's only getting better as the years go on. I guess I would say it's twofold. It's one, kind of in the deliverables. And that's the annual, this is where we see your sales over the next 12, 18, 24 months, right? So there's that, and how we factor that into our modeling. So we use that as is not the only data point, but a very important data point that factors into our budgeting process. And we're very budget centric as a company. So that's kind of the Rosetta Stone every year is the budget. And so we factor ITR data into that on an annual basis. So that's kind of the bona fides that the relationship delivers. But then on top of that, there's a couple more kind of softer, but also critically important. One, the largest that you mentioned is peace of mind. Just like, okay, I'm not going to be surprised here. I remember conversations years ago with Alan about things that shifted their prognostications, and I couldn't come up with one. I was like, oh, like, a war. And he's like, no, not really. And I was like, oh, okay, like 9/11. He's like, no, short term. And I was like, okay. Like, and it was like amazing. And even the pandemic was like certainly shifted things, but not in a whole didn't take a sharp right turn, right? It influenced things certainly, but didn't change things. So I think that peace of mind of knowing that you've got a partner that is very fact and data driven and really excludes the noise, because every one of us, your life can be consumed by the noise if you allow it to be. And one of the things we really value with ITR is they tune the noise out and hear the facts. You don't have to like them. It's okay. We're just reporting the facts. So I think that the bona fides, but then on top of that, the peace of mind that you get, and then also just the relationships that you build, knowing that, 5 years ago, we had some real sluggish performance in our Connecticut branches. And we reached out to ITR and they ran an analysis and said, compared to others, we're looking at housing permits, we're looking at salary levels, we're looking at people moving in and out of the state. And they came back to us and showed us why we were seeing that sluggish, and more importantly, when they thought it could turn around. So in all those ways, I think there's values to it, and it's certainly the baseline deliverables, and then what you can get above that as well based on the relationship. How are you that close when you did not have the pandemic in your model? Because no one did, right? So I think it just speaks to the durability of their data and their model. And for us to, again, that's where so much of the power of the belief in the numbers comes from, is because they have data, they have history, and they can prove it to you. Well, I think any year you can plan a year and then deliver on it you're doing a good job, right? So I think not every company has that ability to either plan the year correctly or execute on the plan. So when you have, it's our job to execute on it. We use ITR to help us plan it. And I think that's where the value comes from, is their ability to give you that data to plan your year and then go and execute on it. And I think those two things, without both of them, you're not ultimately going to be successful. But we could have the perfect plan. If we don't execute on it, why do we have the perfect plan? If you're building the plan on quicksand, it's pretty hard to deliver it, right? So I think the blend of the two in ITR really helps us get that base case to then go build a year. Listen, worth the money, that's someone's own personal decision based on the size of their company and the way they choose to use ITR. I can speak for us and just say that, as a business leader, seeing in the future is almost like a quixotic thing. Like no one can, right? And if you did, what would you do? And no one ever can. And so you just kind of put your head back down and do your job. And ITR gives you a fact-based approach to what is coming down the pike. And that's invaluable in my mind. And again, it's not, they have the history to prove it. And it's not the be all end all. It's not like just say what they're going to do. Just do what they say, and then you'll have a good year, right? You got to work hard to either deliver what they are predicting or exceeding it. But to have that knowledge as a component of your overall view of your business, I feel is invaluable. And when I say invaluable, I don't tell Alan I said invaluable. I don't want my rate to go up, but I think we find a lot of value to it. And think that it's a critical component. And I think any kind of progressive and aggressive business and business leader would want that, so to speak, club in their bag, right? To have that component. And it is just that, to be clear. It's not like we take what ITR says and we cut and paste it and that's our budget for the year. Not at all. It's a factor within, but it's an important one. And it's an unbiased, fact-based one. And that's enormously helpful. We find it enormously helpful. And I would think many business leaders would. And then again, the more you work with them and the longer you work with ITR, the more valuable they become because they know your business better. They know you better as an organization. They know kind of your cadence, and are able to work with you on that. So I think it's a super valuable component of an overall kind of approach to business intelligence and planning and kind of how you're setting your year.